like Derek said, I appreciate Derek giving me the opportunity to share with the group. What we do, we have people in the group that's whatever you're doing for a living, we like to share with the group so you know our network, what you have access to. And I'm a licensed insurance broker. I'm also a licensed real estate broker. I'm licensed real estate broker in New York and North Carolina. I'm licensed in 7 states with insurance. But today we're gonna talk about real estate. All right, let me share my screen. I feel as let me share my screen first. I'm a low tech guy. Make sure I got this right.
I know I taught it better than this.
As Phil would say, can y'all see my screen? Let's see. There you go. Okay. You got it? Y'all got to see my screen? Yes, great. All right. So what I'm gonna do, guys, this is interactive. I got about 9 slides here, but what I'm gonna do, I'm gonna go over who I am in real estate, the history of real estate, what's going on now in real estate, and if it's a good time to buy now, and I'm over the questions, and you can chime in anytime. I'm gonna stop after every slide, answer questions, but if you have a question that comes to you right away, feel free to come off mute and unmute and ask a question. So this is Real Dads Club, a homeowner workshop. Company name is, I have a Next Home franchise. Company name is People First Realty. I'm the broker owner. I got my first real estate license back in 1992. I know, I got it when I was in kindergarten, a long time ago. Like my first license in 1992, but I didn't do much with it. I actually got started back in real estate in 2014. For the last 9 or 10 years, I got back in the industry. So I have 2 offices, one in Brooklyn, one in Charlotte, North Carolina. And our company core value is we put people first, is in our name, People First Realty. All right. I'm going to go over the history of real estate first. If you see here, I'm just going to read off of this. In the early 1800s, they didn't have mortgages back then. So you was basically, if you own a farm, you were able to buy a house with cash. There was no mortgages. Then in the mid to late 1800s, the mortgages started, and people started buying homes. And in the 1920s and 30s, the Great Depression, people started defaulting on their loans. And the government came in and helped. People might have heard of FHA and Freddie Mac and Fannie Mae. Those were programs put in place to help folks get homes, get mortgages. It was like government-backed mortgages. But the problem with that in 1993, let's think back in 1993. Let's think about America in 1933, America. Very racist. So they had rules in place supposed to get homes, but it didn't apply to Black folks. So they had discrimination, something called redlining. You might have heard of it before, redlining, steering, and blockbusting. Now, I put some videos in the chat to explain what these redlining is, what steering is, and what blockbusting is, and how discrimination affect our home ownership throughout the process. Although the government created these programs that help fight discrimination in 1968, they did not create any enforcement to enforce people to stop doing redlining. What is redlining? Redlining is what it is. Put a red line on a map, a red line around a neighborhood and said, don't give loans to this community, kind of like Black communities. The banks were not giving loans to certain communities. They call that redlining. And it was legal. It was actually legal to redline. So I'm gonna let that sink in for a second. There's a wealth gap, a home ownership gap in America right now. Just think about it. It was illegal for banks to give loans to Black neighborhoods. All right. So redlining was legal back then. They had skip. Say it again. Say it again. All right. Then you have steering. Steering. What is steering? Steering is when real estate agents would steer people to certain neighborhoods. Like they would put people, whites over here, Blacks over here, Indians over here, Puerto Ricans over here. That's called steering. They have blockbustering when the real estate agent would tell the client, get out of this neighborhood because the Blacks are coming. So all that stuff was going on in the 30s, 40s, 50s, 60s, and 70s. up until now, really, it still goes on. So in 1968, after Martin Luther King got assassinated, the government finally, after all that fighting for civil rights, they passed Federal Housing Act to prohibit discrimination based on race, religion, and national origin. Again, they passed it, but they didn't have funding to enforce it. We good? They didn't have funding to enforce it. So what happened was people, they still being discriminated against. Black folks still wasn't able to get homes. Minorities still wasn't able to get homes, you know? And then up to 1988, then they created enforcement, and they started enforcing it more. And it's still not perfect, but it's better than it was in the 60s and 70s. But up until 2019, like Mel probably know about this, in 2019, New York Newsday did a 3-year investigation, undercover investigation on Long Island, where they had undercover agents, Black, white, Puerto Rican, going to different neighborhoods, and they found that people was still being discriminated against. So the Governor Cuomo, they had to do something about it. So now what they do now, they have, we have to disclose, let people know they can call a hotline if they feel discriminated against, a phone number. So people are still being discriminated against up until now. So I thought it was important to go through that first, to let you guys know where we started and where we are now. We basically where we started. So, and the question is why? Because it's very important to own a home. Now, people are saying, okay, I got that right. Here's the gap. There's a home ownership gap, and we all know about it. And when you hear about it on the news, it sounds good, but the facts are there's a big gap. There's a reason for it. It started back from history to get to where we are now. It's a lot of catching up to do to get home. So imagine if your grandparents and parents was born in the 30s and 40s and 50s, and they wasn't able to get homes. So what happens is, as you come along, you think you can't buy a home. Nobody in my family had a home. How can I buy a home? It's impossible to buy a home. Does that make sense? So again, it's like generational trauma, generational lack of knowledge, generational, we can't own homes. So it started back then. So I think that's part of the reason the gap is so wide. So right now, Blacks and Hispanics between 40 and 50% of home ownership, as opposed to whites, 75 to 80% home ownership. And I feel like it's based on the history. So we got a lot of catching up to do. All right. I'm gonna open up the floor for a question. Is now a good time to buy a house? I want some input. What do you guys think?
Puma, can I ask
Oh yeah.
I don't know if it's an unrelated question,
Go ahead.
but I'm gonna ask anyway. I'm a homeowner, and
Yeah.
we didn't 26 years ago, we didn't use my military. If I wanted to do another purchase, could I use my military?
Yes, you can. You can use your VA one house at a time. So since you didn't use it at all, you can use it.
Oh wow. Okay, thank you.
It's like me. I use VA to buy this house. I can't use it again until I close this loan out. I can use it again.
Oh, so I can definitely
Yes, down no
make a purchase with no problems.
There's no problems. And what he's talking about, guys, is it's another program, a VA loan with no money down at all. So, and you get that benefit as a veteran, you get no money down when you buy a house. Yep, you can use it. No problem. So anybody want to answer the question for me? Is now a good time to buy a house? There's no right or wrong answer. It's basically your opinion.
Well, I had a question. Go ahead.
I was just gonna say, yes, it is a good time to buy a home. I'm just thinking because of what happened in the past with not in the past, but with COVID and everything that's been going on with the housing, that maybe it's a good time to buy it now that the market is now affordable per se.
Yep. Well, I agree. I mean, yeah, we have a saying in real estate. Don't wait to buy real estate. Buy real estate and wait. It don't matter what's going on in the market. Not because I'm a broker and a salesperson. That's just the mindset of the stock market. You buy for the long term. you buy homes for long term too. It's not just for now, it's for now and long term. So it said, don't wait to buy real estate and wait. And what we also say is that people might say the interest rate is high. Listen, you marry the house and you date the interest rate. What I mean is that you can get the house and the rates go down, you can refinance and get a lower rate. You know, so I believe it's a good time too, because there's less competition out there. If you qualify to buy right now, there's no competition. There's less buyers out here right now. So if you're gonna buy it, if you're able to afford to buy right now, it's a good time to buy. Because 2 years ago, it was 20 people for every house. And now it's the opposite.
I have a question, Puma.
Yes.
But I was told that with the interest rates being high, which I see now, or hear now, don't let that stop you. But the houses are overpriced. And a lot of people are outbidding each other with cash, or that's not the case anymore.
Well, I mean, they're not outbidding with cash, because right now, the sellers that are overpriced right now, I got a few listings. I got 6 listings right now, and 4 of my sellers are overpriced for this market. And overpriced for the market, because the market determines what it should be selling for. If it's in the market more than 90 days, it means it's overpriced most of the time. But right now, you're not being outbidded right now. You got cash buyers with cash trying to get discounts on the houses. Regular buyers with regular mortgages, there's no competition right now. The sellers got to go down if they're going to sell. If they don't want to go down, it's not going to sell. They take it off the market and wait till the next cycle. But right now, I feel like buyers have less competition. And the interest rate being high is relative. I'm going to show you my next slide. It's high compared to what? It's high compared to the last 3 or 4 years, but it's not high compared to historical rates. Hope I answered your question.
Yes. Thank you.
Yeah. Debbie, you have a question you said?
Doug had a question, and Leo.
Yes, I have a question. No, well, not a question, but I was just going to piggyback and say, yeah, it's never a good time not to buy a house. And when I bought my house, my interest rate was like 9.99%,
Exactly.
something like that, almost 10%.
Yes.
And people was like, don't do it. But I wanted a house, and I was looking for 3 years. And the first real estate agent couldn't deliver. I got a second one. I had them both looking. 2 was looking. Then they couldn't deliver. I had 3 looking. And then I experienced the same thing that you're saying called steering, where the real estate agent kept taking me to Canarsie. And Canarsie was at that time already turned over. So I was like trying to get a change in the difference for my kids, the diversity. So the lady was like Russian Jewish. So I told her, Miss, I want to go where the white people at. When I told her that, her face changed. And she looked at me and she said, okay, you want to go with the white people? I said, yeah, I want to go with the white people. We grew up with my people. So now my kids need to be diversified to see what everybody else is doing in their community. So then the first house she showed me was the one I bought.
Wow.
So sometimes you got to see what they're doing. And if they're steering you, you got to tell them, look, where you want to go, because you paying this money. And don't let the interest rate stop you, because we refinance many times as we need to pay anything off, to fix up the house, to pay off debt, you name it, student loans, whatever. So do what you got to do, but don't delay yourself from getting your first home or your first home.
Hey, thank you. That's some good input there. Definitely good input. Yep. And you said that steering thing is serious. You experience it yourself. So steering is real. Next, Derek. Derek, there's another question, Derek?
Yeah, Leo. I think Leo had a question.
Yeah, I have a question. Now that Doug brought it up about tapping in, and you can use it to basically, it's basically like a cash cow, right? But my question is, because I've heard this, right? And having a property, everybody threw around the term refinance, right? You can refinance, so you can tap into the equity, you can take out money to do this and do that. And I was told, it's legal advice that I was told, people use this term loosely, and refinance that's not refinancing where you just take money, but refinance if you have a 30-year mortgage, let's say you refinance, it's not where you can take money out and then continue at let's say you have 12 years in paying, and you start at, you continue from 12 years and keep on paying until you finish your 30 years. You actually have to restart the clock after you refinance, and it's like starting the loan over again. So my question is refinance a good thing, or is it just passing on debt to your kids if, let's say, God forbid, something happening?
Well, that's a good question. The answer, it depends. Every situation is different. So you have the refinance where you start over the clock. That's when you start the clock over. But that money is being used for, like Doug said, college education is worth it. If it's being used for, you're not just buying a car, buying sneakers, buying a Rollie, but you know what I mean? If it's being used for something productive, it's still coming out the house, and you're gonna stay in the house and for the lifetime of your kids growing up. So the clock does start over in that scenario, but you also can get a HELOC, which is not, it's a loan, a second mortgage where you take money out. So you have two mortgages. You take money out, $50,000 out. Instead of doing the whole thing over, you take some money out. Take out $100,000 rather than doing a whole loan over. So you can do a refinance or a home equity line of credit, or home equity line. And it makes sense, Leo?
Makes sense now that you say the HELOC and you have, yeah. So you
Right, and
won't have to start over again.
Right, and also with me, with my house I live in, I decided I'm going to stay here and not take anything out and pay it off. Anything else I buy outside of this, I'll use those features, refinance and HELOC. But the house I'm staying in here, I want to get this one house paid off for my daughter eventually. So I won't take anything out unless it's a dire emergency. As I said, it depends on what your strategy is, you know? Cool.
Can I say something real quick?
Before you go home, can you also just talk about when you're refinancing, sometimes you can just refinance just your interest rates and you still keep everything the same, just maybe your mortgage payments drop.
Yeah, it's getting lower. Yeah, you can do that too.
Can I say something? Oh, I'm sorry. Go ahead, Puma. I want to say to my brother, Leon, a lot of times they some people unknowingly tell us these things about refinancing just to keep us completely out of the game. That's what I think. I mean, I'm a conspiracy theorist, so I would think that.
Well, I'm not a conspiracy theorist, so I think that when people are always trying to make money, they got to do what you got to do, what's best for your family, what's best for you, what your strategy is. Like Derek said, sometimes you refinance just to get a lower monthly payment too when the interest rate goes down. You know, I want to ask Mel. Mel, can you hear me, Mel?
Yes, Mel is on.
Mel, being a realtor, I want your input. Is now a good time to buy a house? What do you think? What would you say to the group?
I think it is. In the last year or so, when the prices of houses were very high, and there was a lot of people haggling over a little bit of inventory. So it was easy for homeowners to jack the prices up because people were doing whatever it is to get it. So being that there wasn't as many buyers in the last year, the home prices have been the home prices have came down.
Yeah.
So like you said, the people who are still putting houses a little higher than they should be, then they're just sitting on the market and they're not selling. So they're gonna want lowering the price anyway. And those people that come in with cash, like you said, they're lowballing with cash anyway. So the reason people are accepting cash is because their home has been sitting on the market and not selling because they're overpriced.
Yeah.
So you have these buyers now. And to be honest with you, I like people say the interest rate is high, right? And that's just something kind of I feel like to trick us into not getting in the game, like you said, because in all honesty, that's something that the news does to, invoke fear and stuff like that, because our people, we still go buy credit cards with 24% interest. We still go get cars with 18%, 20% interest. But then when it comes to buying a house, then we like, oh, that interest rate is too high. That's 7%.
Yeah.
You know what I'm saying? So like all of those tools you said that'll help us get in the game now and then refinance or home equity loans and all of those things. Like you said, it's better to get in the game now, than sooner than later. I think.
Like I said, don't wait to buy real estate. Buy real estate and wait.
I like that too. I wrote that down.
Yeah. Any other questions before I go on? Derek, any more questions before I move on?
Yeah, I guess a question also, just what are some of the programs that might be available if someone's buying a home?
Okay, yeah. This is my next. I got a couple of slides coming up. Okay.
Okay,
Yeah,
I will say that.
Okay, look. So now, again, is now a good time to buy a home? It depends, and I'll say yes. You know, okay. So people say I'm waiting to purchase a home because there's perception and there's reality. I'm waiting to buy a home because the housing market is going to crash. That was going on earlier this year. That people saying that, but in reality, it's different from 2008. 2008 was a mortgage crisis. It wasn't a housing crisis. It was a mortgage crisis. And then another question is the mortgage rates are too high. Well, that's relative. This high based on what it was in 2020, 2019. But look, in 2020, rates was unprecedented. October 1981, rates was 18.61%. Again, in 1981, it was 18.61%. In May 2000, it's 8.6. Like Doug said, he was 9.9 when he first bought his house. Hey, Doug, what year you got that first 9.9? What year was that?
That was like November 9/7.
Right. You know what I mean? Yeah, exactly. See? So that's what that was the rates was. You like Mel said, interest rate on credit cards are crazy. So it's not really high. What happened was the last couple of years we was at 2 and 3%, and people they missed out. That's over. So 6 and 7% is really not bad. All right. So then some people think I need a large down payment. Well, Derek was talking about a minute ago about programs. There's government programs out there, an FHA loan where you put as little as 3.5% down as a down payment. A lot of folks, they need $100,000 down. No, sometimes you get $15,000 down, $10,000 down, you in a home. And then like I'm warning, the VA loans is no money down. Okay, so that's one of the things Derek asked about is that down payment assistance. So just think about if you got a house for $100,000, just for the numbers, that's $3,500 per $100,000 down payment. So 3.5%. It's not a lot for a down payment. Any questions on this slide?
Yeah, I have a question for it's Yada. In regards to the down payment, let's say FHA program, 3.5%. From what I hear from people, you know, I'm not a homeowner yet. Excuse me, looking to be.
Okay.
That the lower the down payment, you have to pay the PMI, which is more of a cost that's incorporated into your mortgage. So is it better to put the higher down payment long run wise so you don't have to pay a PMI? Because is that PMI, is it that astronomical financially to just pay it and have it all incorporated into your mortgage versus putting a higher down payment and you're saving your money long term? Like, I don't know.
Okay, so my favorite answer is always depends. Every household is different. It depends on your mindset, your goals, what kind of cash you got. This program I have is in place to help folks that have the challenge of trying to save $100,000 and move in a house. This program is say a little bit of money down, but you're gonna pay a PMI, pay a mortgage insurance. They still gotta cover themselves. That PMI is a mortgage insurance until you get up to 20% of the mortgage paid, 20% of the value paid, then it cuts off. And some of them last forever, some of them cuts off to 20%. But to answer your question, it depends on if you don't have the money, it's still better to buy a house with the PMI. You know what I mean? So it's like, you don't have the money to put down 20% or 15%, hey, buy the house for 0.5%. That's what the program is for, to help you get in a house with a low down payment. And as you build up, you will knock out that PMI. So and people gonna always have
and if you refi, always leave 20% on the table in that equity, so you don't have to get hit with PMI on the refinance.
And what he means is, Kenyatta, is your house. That's another slide too. Your house gonna build up equity to be cash. That's not. It's like fake money, but it is money because the market said it's money. And when you refinance, now you got that 20% to put down. You're gonna borrow less. So you're borrowing 80%, not 97% next time. That makes sense.
A little bit, I understood that.
But hell it is though. People gonna always tell you what you should do, what they did. It's always come down to when you ready to make a move, talk to the people on your team, and we break it down and give you pros and cons, what you should do, based on.
Let me share this one extra jewel. So So like Kenyatta, you looking for, you know, residents and stuff like that. Let me tell you a jewel. Anybody work for the city, state, or have any type of retirement investment fund, you could bring that to the table and they'll give you the loan like this. So that's just a jewel for y'all.
Yep. 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 Any other questions on this page?
Thank you, Doug.
I had a question on the PMI.
Go ahead.
So I noticed that certain programs eliminates PMI. So if that's a requirement, like how are they able to, like there was a program, I think it was called NACA.
Yeah.
And they, you know, I guess you come in with no down payment, PMI, no PMI. I'm like, how are they able to do that when anytime you go for a loan and you buy a home, that's already included into that if you put down, like, let's say the minimum 3.5.
Well, there's a lot of programs out there based on what's going on in the market, different programs and credits that comes into place based on what's going on now. We're offering this right now, you know, so some like NACA, different nonprofits, different banks, different programs out there. It's all a contract. They can make a deal with you how they want to do it today, and the next month is over. So you got to get in when it's hot, and when they need you to get in like that, they knock out. Let's take out this. Matter of fact, Zillow is offering 1.1% down right now. Have y'all seen that? Zillow? They offer 1% down right now. So it's different programs out there. So there's no set rule because the bank is the bank, you know? They do what they want to do. It's their money, you know? Anything else?
I'm
Mel,
sorry,
you want to
Puma.
add anything?
I said that because the reason I said that is because why would a bank want to take away something that they're gaining from? You understand? Like they're not doing this because they love
you. You ready? You ready? Imagine this. 30 years of interest. 30 years of interest. They still getting paid, bro. They still getting paid. They might make money the day one. They're making money for 30 years. The long game.
There's a question in the chat.
Go ahead. Read it for me.
Buying your home
through your business.
So, if you got cash, you buy it through your business. Banks, they frown upon buying it with your business because your business they come in for your broke business. They want to come for you personally if you foreclose. So banks frown upon LLCs buying a house unless you're paying. You're buying it for cash. I bought houses for cash in my business, you know, but they don't want to get no loan because your business is a cover, and you default. They come for your broke business, but they can always come for your social security number. You know what I mean? That makes sense.
Did that answer your question, Paul?
What else, Paul? Cool. All right. Next slide, guys. So that was the the rates. You know, over the years it's been up to over 15%, but now it's at 6 or 7. People going crazy. So now, here's talk about some benefits of being a homeowner. One benefit is, the first thing I'm talking about is tax advantages. So one of the biggest problem with accumulating wealth is that Uncle Sam, the taxes. You want to try to find a way not to pay taxes legally. So when you own a home, you get some write-offs. You get write off property tax, you write off interest on a mortgage, and you also can write off depreciation on the house. The house depreciates over time. You can write it's a formula the accountant uses that knock off some money in taxes every year. Another benefit is we talk about building equity. Equity is different from what you owe and what the house is worth. The middle of it, that's equity. That money, you can borrow that money. Normally the bank allows you to borrow between 75 to 80% of your equity, you know, of your equity. So the equity, like Doug said earlier, you borrow that money. That's why that wealth gap is big. Because imagine people bought their houses in the 40s for $20,000. Now it's worth $1 million. But our grandparents weren't able to buy that money, buy those houses. So their kids they funded their college education with that money. We don't have that money. They bought other houses with that money. They did things with that money we couldn't do because we wasn't able to buy houses back then legally. We wasn't able to get mortgages. So that equity is real. Another benefit is appreciation. I sell houses in Brooklyn, man. So people who bought houses in the 90s and the 80s for 200,000 and best style 1.3. That's some serious appreciation. Making $1 million on a sale. So buying a home that's another benefit. Equity and appreciation. I'm gonna stop there. Any input on that? Taxes and equity and appreciation? Any questions?
Yes, I have a question, Doug. I mean, I'm sorry. The bald head. In regards to tax advantages, I know every state is different, obviously. And I know in New York State, I don't know if it was during Trump's administration or Cuomo, they changed the law for New York State. They put a certain cap or something. I know a lot of people was upset. I don't know if it was with the property tax or something.
Yeah,
but
I'm
every state is different. So are there pros and cons with different states when it comes to taxes?
Yeah. I'm not a tax person, but it's still an advantage somewhere. Like when Trump was in office, he did something. He put a cap on the property tax. I think it was $10,000. Like my taxes right now are $12,100. He capped it at $10,000 you can write off. But I'm not a tax person though, so there's still an advantage. But when you're paying rent, there's no advantage in your rent. So still a tax advantage. So and also with that mortgage, the mortgage interest is written off as an expense too.
And it's something called SEMA, CEMA. When you refinancing, that saves me about $7,000-8,000 each time. So look into SEMA.
And you heard what Doug just said? He said each time, which means you refinance and get money over the time of that loan. Yep.
Okay.
Anybody else? All right.
George had a question.
But hey, light skin. Let's not do it. Light skin.
Peace, my brother. What up?
What's up, brother? Peace. How you doing?
Out here feeding us with these gems. I love it, man.
How you doing, brother?
I'm good, man. I'm good. I got 2 questions. One is in regards to the tax write-offs and everything beneficial, right? Wouldn't that necessarily, you would have to use your home as a business, correct? Or are you able to just get the tax write-offs just because you're a homeowner?
Well, here it is. As a business, you get extra write-offs with a business in your house, but as a regular homeowner, you write off the property. I mean, I'm not a tax person now. You take your stuff. You get something in the mail from your mortgage company. It's like a W-2 or 1099. How much interest you paid for the year? Give to your tax guy, and they do their calculations, and you write up a portion of your interest and taxes, and also your property tax go to your tax guy too. They put it in that whole formula. That's a deduction against the income that you made. I'm not a tax person. You made 100,000. You get as much deduction as possible. You want to have what's left. What's left? My taxable income. I made 100,000. Right now, 100,000 is taxable. How many kids you got? Take off 5,000. How many is this? Oh, now instead of tax 100,000, tax 60,000. So the home ownership lessens your tax liability. I don't know exactly the number, but it does.
So the second question I had was, would you advise in regards to payments, right? Mortgage payments, would you advise hitting that payment twice a month? So hitting like around the 1st and then hitting it around the 15th, so that now you're knocking off. Now, necessarily you're not paying the mortgage price, right, at that range. But if you hit it, like, let's just say a mortgage is 3,000 and you hit it 1,500 the 1st, 1,500 the 14th. Do you advise something like that?
Well, it depends what your goal is. Depends what your goal is, because your interest is daily, but depends what your goal is. It's like, if my goal is to pay my house off, I make a payment and make extra payment every month. I'm trying to pay. I'm paying this house off, so extra payment every month. Now they say every day counts. So what you're saying makes sense. 1,500 and 1,515, but I think I would do the 3,000 on the 1st, knock it out, and anything extra that month. And then apply the principal only. Make a full payment, right? And anything extra, you apply the principal. Make sense? Because what happens, you pay your mortgage, they got taxes in there, they got interest in there, and they got a little bit of principal. So you make that full payment and do the extra 200, extra 300, extra whatever it is. What I do every month, for me, I make my balance in a zero. So I make my payment, and I see what the balance is now. After it goes through, then I make it zero. And I pay a little extra, make 300, 344, 355, a little extra every month. That's it. Yeah. Hope that answers your question.
I have a
And
question.
you have to specifically specify the extras for the principal, else they'll
Yeah.
put it towards the interest into the mortgage.
Yeah,
Oh.
you gotta make sure you say principal payment only. And that's after your current payment is paid.
Puma, is this factual or just what people say when you make one extra payment a year for 10 years and or something and knocks off a certain 7 years off your mortgage or something like that? You
Well,
know?
it's factual that the mortgage is paid off faster. The exact number, 10 years not exact, because you got a mortgage calculator. You can, in my company, my mortgage company, I can put in a simulation of if I pay this amount extra every month, how many years it takes off. It tells me how I can cut off 10 years, how I can cut off 15 years, how I can cut off. It can show you. It's based on, it's a formula, so it's not exact 10 years.
And what do you say versus 15-year mortgages if they still doing that versus a 30-year mortgage? I know the payment is higher, obviously.
But here you go, ready? It depends on what your strategy is, what your goal is. Like, is your goal to pay your house off right away? 15 years. If your goal to let it ride out and borrow from it, let it ride out and borrow from it.
You know what, Brother Kenyatta, this is to Brother Kenyatta and Brother George. We did it. It was a heck of a struggle. We paid twice a month. It was a struggle, but hey, I'm not one of those fly guys, so I didn't have a lot of clothes anyway. But it was a real struggle when we finished, you know. But just a quick question to my brother Puma. You were saying that we can use the military, right? Do I have to live in the residence?
Yes, you have to live in it, yeah.
Oh, see,
it's your own residence. It's your own residence.
Oh, okay, yeah, that's where the hitch is.
It's not an investment. It's for you to live in.
Got you.
You can say that.
I got you.
All right, I'm gonna speed up a little bit.
Add to what Light Skin said as well, because one of the things that, in terms of just paying that extra payment, paying it when you pay like the first, because we actually pay on the 1st and the 15th. And what actually happens is that it ends up being an extra payment a year.
Nice.
So it ends up being an extra payment a year. So if you do that, as opposed to paying like once the 1st of the month, you just break it up between 2 payments. And it has to be specifically a certain time. So it's like if it's the 1st, I think we do it on the 1st and the 15th, but at the end of the year, we end up paying an extra payment. So if you do 5 years, couple of years, it sort of lowers the amount of payments years that you have there.
And what I would add to that is talk to your service to let them know what you're doing, like Doug said. Make sure you know what you're doing.
Yeah. Good point.
All right. So now, anybody else? Next minute, I'm gonna speed up a little bit. Next benefit is limit gentrification. That's a big word for me, but people complain about gentrification. Complain gentrification, right? How do you stop it? If you own the freaking property, you don't gotta sell it. If you own the property, they can't throw you out. So business ownership helps prevent gentrification. And why we don't own homes, I'm not making excuses, but we got a history from the history of why we don't own homes. Because the history showed they didn't let us buy homes. They didn't loan us money. It was real. So no excuse now, it's facts, but we got to do something about that. We got to buy homes now for our kids and grandkids not get displaced when somebody say, I want to live here now. Nobody want to be in Bed-Stuy. Now they want to be there, they kick people out of there because they don't own the homes. So if you own the homes, it'll stop it, it'll limit it. Ishmael, you got a question?
Hold on a second. Let me lower it down. Quick question. How do you, rare occasions, how do you fight against like public domain? Let's say if the government is like, or the local official estate implements public domain, how do you fight against that?
Well, I don't know much about that, but what I would say, the public domain is the government coming in saying we need this property for X. They already went through the proper procedure to say we need this for the betterment of the community. it's gonna be hard to stop it, but you're gonna have to have a swell of people get together to try to stop it. That's what I would say. It's be hard to stop.
Yeah, it's hard to stop because my aunt, they came for their property when they was on Sumter Street some years ago.
Yeah.
And they couldn't really stop it. They wanted to do new development in the neighborhood. So they say, look, this is what we're gonna buy y'all out with. And you got to remember, in the state of New York, especially, you don't own the land, you just own the house that's on the land. So that's how they get you.
Yeah. Yep. So now the next benefit is, we talked about it a lot in this call so far, is to begin the generational wealth, because you got that home, and that home is helping your kids go to college, take money out for college, help put money away in life insurance policies, put money away for retirement. That money, it helps start it. It helps start it, you know, and you're not getting outplaced. Let's see. So now, let me go back real fast.
Marcus had a question.
I know you had a question. Yeah, go ahead.
Said, did they give, I guess this is for you, Doug, did they give your aunt a reasonable price?
At first, not, but being that my uncle, he was like a Supreme Court judge, he got attorneys that represented her, so they bumped up her numbers a little higher at that time. But everybody didn't get the same deal, so you got to really get an attorney to fight against something like that.
Yeah, man. Good. So any questions? So I'm gonna go over next.
Paul had a question.
Yeah, and Paul, I know Paul just brought us home recently, so I want to get you some input on buying a home, Paul, and answer your question too. Congratulations, Paul. Like, he's brought us home. Yeah.
Thank you. No, I was gonna say, I don't know. I've been on the fence about it. Like you said, I look at it from both sides. It's always a good time to buy a home. But then I also follow a lot of multi-millionaires and people with a lot of money, and I notice a lot of them talk about renting. And I find it very interesting that a lot of people who can buy multiple homes and et cetera, they rent a lot. And that aspect intrigues me, because I'm doing more research as to why they renting, and versus why a lot of people who I don't want to say necessarily couldn't afford to buy the house flat out. They're locked into 30-year mortgage and et cetera. So I look at both sides of it, and I'm doing my research, but I'm very happy. And like you said, that equity part, building equity and the home, and the one thing I will say, the biggest shift for me is I grew up in the city. I grew up in apartments. I grew up with leaving the lights on, the water running, et cetera. And yeah, exactly. And now it's just getting used to looking out for things in the home, because somebody told me that your house has to settle, and they had to explain to me what that meant. And so just learning those things. So you have the financial aspect, but then you have the maintenance aspect that you have to get right, because if you don't, then that increases that adds money to it.
Yep. Thank you, Paul, for that input. To answer your question about renting, when people get rich, they start giving you different rules of the rich. You know what I'm saying? So, because we talk about it depends on your current situation. You buy a home most of the time to secure your family, secure your children, to secure what's going on in your life right now. So if you're mobile, you military, you're gonna be moving every 3 or 4 years. Hey, you rent. But if you buying a home as a family, you're gonna be somewhere 10 years. I say buy a home. But that's just my opinion. But a lot of rich folks talking about don't buy rent. They got something up their sleeve and they keep preaching that stuff. They got something up their sleeve. You know what I mean? But they really do. Because for the average human being, buying a home is still a good purchase, because you gotta live somewhere. Okay. So guys, I'm gonna speed this up. But the next time I'm gonna go over the steps to buying a home in real fast. And of course, my number is gonna be at the end. Any questions you can have me. We got Mel on the call now too, another realtor on the call. We're here for each other to help you. And if you have any questions, just stop me. So the next thing is the steps to buying a home. Like what you need to do to buy a home. So I think it's good if you don't have a home to learn this stuff now, to know it's ahead of you. Like Paul just went through it. A couple other brothers went through it. Sam just went through it on the call. Clem just went through it too. So these are some steps. I think you guys will agree, Paul, that was good to know this in advance. What are some steps to buying a home? Do your own personal assessment. Get your credit report. Look at your credit. You know what I mean? Select your team. What is your team? I'm gonna Marcus saying. Oh, I'm gonna take Marcus when I finish. Select your team. What's your team? Your real estate professional, your mortgage person, your attorney. You gotta need a people that's on your side to make this happen. People you trust to work with that's gonna do it good for you. Real estate, attorney, mortgage broker, that kind of person. The next thing is you want to get pre-qualification or pre-approval. Pre-qualification is basically go to a bank and you tell them how much money you make. You tell them what your credit is. They give you a pre-qualification based on your word, which is not worth much. A pre-approval is you give them they run your credit report. They get your pay. They get your W-2. They get your tax returns, and they give you a legitimate pre-approval. That's like cash going to a seller now. I want your house. I'm pre-approved with this cash. All right. Then you mentioned earlier the PMI. You put down more than 20%, less than 20%, you got to pay PMI. But in New York, you start your home search with disclosures, discrimination disclosures, agency disclosures. You do those disclosures and that kind of stuff, get out the way. And then you look for houses. Once you find a house, you submit an offer. Of course, it's a back and forth with the seller. You know, they want 700,000, you want to give them 675, then y'all finally agree on six whatever. In New York, the next step is the home inspection. Because y'all already agreed it's pretty, you agree on the price. Now you gotta get a professional to come in to inspect the home, to make sure the plumbing is right, to make sure the electrical is right, to make sure the roof is right, the foundation, the stuff, the real stuff. After inspection is done, you might find something that's wrong. You have to negotiate the price. They say, hey, you need to fix this roof. You need to fix this plumbing. Oh, take off 10,000. Now you got to a lower price. Now you got a price you agree on. In New York, you go to a lawyer and you do a contract. Once you sign a contract, you're in what's called pending status, in contract status. Once that's done, the buyer and the seller agrees on the price. Everything is good. Now the bank gets involved and say, let's make sure this house is worth what you offering the seller. That's called a home appraisal. I call it a bank home inspection. So the bank come in and make sure the house is legit, because they give it up 80 to 97% of the money. After that's done with the bank, then the bank comes with what's called a commitment letter. Now the bank agrees with the house, hey, I'm committing to this deal now. Now the lawyers sit back and they do the title search, make sure the person who owns the house really owns the house, make sure the title is clear, make sure there's no liens on the title, make sure there's no, like in New York City, there's no violations, no sidewalk violations, none of those violations going on in New York City. All right. And then after that, everything goes well. The banks come in at the very end. They do a final check, because this could take 3 months in New York, 2 to 3 months in New York. So say in May, they ran your credit and you had a good job. So now it's August, time to close. They got to check your job again, make sure you didn't get fired. And they got to run your credit again too. Make sure you didn't do nothing stupid with your credit. You didn't go finance some furniture. You didn't go buy a new car. So they got to make sure everything's, so I would say once you start this process, don't do anything with credit or money without talking to your mortgage person. Anyway, so they come back again, they verify your income again, they do a final credit check. And when that's done, they give you what's called a clear to close, and we do a final walkthrough. Now the final walkthrough, guys, is done. I like to do them the morning of the closing, because once you sign those documents, that house is yours. It could have burned down overnight, it could have flooded overnight, could have got van lines overnight, could have got pipes taken out. So that morning of, I do the final walkthrough. So you walk through at 9 o'clock, 11 o'clock closing, now you know what you're signing for. Once you sign those documents, you have your keys. All the stress is worth it. Boom. Here's some costs involved. Attorneys cost $1,500 plus. Title insurance, according to 6% of your purchase. $200 for a customary fee in New York. And this, I'm talking New York right now. In New York, anything sold over $1 million is 1% extra tax called Manson tax. The mortgage recording tax. Home appraisal fees between $300 to $600. Now, also I want to say too, when you buy when you sell a home too, so you got to sell a home. When you make a profit on your home, you got to, that's earned income. But the first $500,000 is tax-free if you're married. The first $250K is tax-free if you're single. All right. Any questions?
I actually have a question. In
Yeah, go ahead.
regards to the attorneys and all this. Is it better? Well, I'm thinking it would be better for you to hire your own attorney and appraiser in this process, because sometimes when you buy a home, I believe that probably the agency or the real estate person who works with the agency have their attorneys and have their inspectors who would come in and I guess appraise the home or have attorneys that they work with. But sometimes that could be like a conflict of interest because they're working with them, so they want this home to be sold. You understand? So they
Yeah.
might work, you might get a something that you didn't bargain for because
That's a good point. So what happens is the appraiser is an independent person. That was the problem from 2008. They was just pushing loans through from 2008. Now the appraiser is independent of the buyer or the seller. He's independent company, the appraiser, independent. The attorneys, you need to have your own attorney, of course. Now, what happens is a lot of people are first-time homeowners, so they don't have an attorney. So what I normally do, I have 3 attorneys that I give you. Hey, I have a female, a black female, a white female, and another black guy. Here's 3. You decide. You can call them all. You know what I mean? Same thing with the home inspector. I got male, female, short, dark. Here's 3. My goal is to give you 3 people, and you choose. So when it goes wrong, you can't say that's the guy you gave me. I gave you 3, so you chose those 3. So that's true. So you don't want to. I don't want to give anybody unless you got somebody in your family that you work with. That you work with, but otherwise, I give you 3 to choose from, and you can go look them up online. Go to Google, go to their website, and look them up yourself. And you pick that attorney, and you pick that inspector. You know, but that appraiser comes from is an independent person now. Cool. Anybody else got anything else? As a wrap up?
Can you describe what a lien is?
A lien is a lien is something like, so for example, the best way I can describe it, tell you, say for example, my house is for sale. But in the past, I had a plumber come here, do some work, right? And the plumber, we had beef. I didn't pay him. See, no problem. I'm putting a lien on your property. So when I go to sell my property, it shows up. I can't sell it until I pay that lien, clear that lien off. It's an encumbrance on your title. The title it's a cloud on the title. That makes sense? It's a cloud. It's like,
yes, it's like a stain.
It's an encumbrance. You can't move forward until it's clear. So it's a lien
Right,
on the title.
It's saying you pay me for what you owe me from back then. That's what the lien is. You
And
can't
that's called
sell
mechanics.
or go
That's
forward.
mechanics lien. That makes sense? Who's that for? Who's that?
No, that was me. I was just adding.
Nashim. That was Nashim that had the original question.
So Nashim, again, so it's like, it's something to hold, you can't move forward. Like you stuck. It's a lien. You can't move forward. It's not a clear title. So that person, no, I'm not going to fight you, shoot you, and go to jail. When you try to sell that house, I'm going to get my money.
Yeah. I have a question.
Mm-hmm.
Pumas Yada.
Yada, what's up?
Two questions. One, do you have to provide statements, financial bank statements to your bank, to the mortgage people, right? And how many months do they want to see? And do they need to see all your personal financial stuff, like checking and saving? Or can you just show a portion? Or do they want to see what you have total? Also, the second question is, what are your thoughts, and is it good to purposely buy foreclosed homes?
Okay, the first question is I forgot the first one. Go to the second one first. The foreclosure is based on, again, what you want to do. A foreclosure is usually a property that's going to need some work, and people are going to be bidding for that property. Probably you just go to auction. You get a good deal on a foreclosure, but you might most likely do some work on that foreclosure. It won't be moving ready. So a lot of times, a FHA loan won't approve it. You have to get a construction loan to get that foreclosure approved. But sometimes you can get a foreclosure that's ready to move into. So foreclosure is a good property to buy based on the price, but it always comes with something going on with that foreclosure. Because sometimes the owner damaged the property, they mad, they're getting kicked out.
All right. Now you
What was
got
the first
pipes.
question?
Oh, the first question was, yeah, my personal financial institution, my
Okay,
bank.
yeah.
How
So what happens?
how long they gonna look back for, and they seeing how much you saved, how much you have in there for checking and saving? Can you just show one account?
It's based on they're gonna see how much money you need to have in reserve. So you can show one account if they have all the money you're looking for. So it's like 3 to 6 months of money. Couple of reasons. They want to make sure ain't no drug money, no legal money being laundered in there. They want to see money that came gradually, not no lump sum got dropped. Where that money came from? $100,000. Where that came from? You know what I mean? Oh, I got my 401k, my 457. Okay, cool. They want to make sure no laundering going on. So they want to show that you have the money in reserves to cover the mortgage for 3 to 6 months. And each bank have their own, parameters though. So look, they do check and save, it doesn't matter. They tell you how much money they want to see in the bank though. They'll tell you how much they want to see in the bank. You have it in that bank account. You don't gotta show them all your accounts. They want to see 50,000, you show them the bank got 50,000 in it. You want to see 30,000? Like that. Got it?
Gotcha.
Thanks, Pete. We got the person with the impressive beard, Phil.
Okay, yeah, he got a regular. What's up, Mr. Phil? How you doing, sir?
Hey, great job, man. I appreciate the in-depth of everything that you've gone over. One of the things I saw was just like the generational wealth piece. So would you advise people to put homes into the trust as the beneficiary or in the person's name as far as taxes is concerned and things like that? What would you advise for that as far as passing the home to the next generation?
Yeah, so I'm not an expert in that area, but one thing I do know is that you want to talk to a lawyer and a tax person to get that thing in order, get the will and the trust. That's the next slide too. It's in the next slide, Phil. Get the will and the trust done. Talk to a lawyer, get that done, because you want to make sure if you're building all this generation wealth up, make sure it's easy to pass it on. I got 2 deals right now I'm stuck with because the houses got passed on, but they got passed on with their mouth. This is yours, son. This is yours, daughter, but there's no paperwork. So now we got to go to court and go to probate and take it forever. I got people who want to buy these houses for the last 3 months, but now they can't buy because the title is not clear. Because the person died with a will, without a estate, without instructions. So you want to get with a lawyer and get that done right to make sure it's in a trust, irrevocable trust, different ways to do it, Thanks, Phil. Anybody else?
I just want to add to say, when you're getting, the bank and the mortgage company and all the people who's going to put all this together, get each individual entity, your separate lawyer from the bank, everybody separate. Don't go for no package deal where they say, oh, we can handle everything. Because when they do that, there's always a loss that you're going to take some kind of way.
So they friends.
It happened to me. So I took a little loss on some money. And I'm gonna say it like that. And by the grace of God, this guy's still living. But I'm gonna say pretty much I found out that when you separate the attorney from the bank, from the people giving you the loan and all of that, it's checks and balances involved when it's like that, because they want to look at the next person's stuff. They want, let me see what you got from, the bank want to see this, the attorney want to see this, and then the loan company want to see this. It's all, works together as a check and balance to protect you.
That's true, because we're all human beings. So the attorney, the bank, they're all humans. So they working together. It's not always good. We want to be independent of each other. Have some kind of animosity. They want the deal to come together, but they want to make sure it's the right thing for the client, not for them.
Excuse me, Puma.
Yes, sir.
What's that formula? You said it a while ago, like when you did this quite some time ago. When you pay a certain amount of rent, it's a certain figure based off of what you could afford in the mortgage. Was it $800 for every 100,000?
I think it was 800 per 100,000. I forgot.
Okay.
Hey, Mel, you know that formula at all, Mel? Top of your head?
Not off the top of my head.
Okay, I think it's 800 per 100,000 dollars. I think.
Okay, thank you.
But I'll look it up and get it to you though. I'm sorry, light skin. What's up, brother?
No, I was so off of that comment you made, man. Also, man, for those looking to buy a house, man, Puma was talking about, everybody kind of working together, man. I had, the person that was helping us find a home, a cool person, you know what I mean? She was definitely about a business. But when we finally found a home and we purchasing it, all of a sudden after the people said, yes, we're going to sell it to you. Then all of a sudden, 3 days later, oh, they got another buyer. It's like, yeah, but they agreed to sell it to us, right? So I said, all right, cool. Wrote a letter to them and all that. Crazy. Wrote a letter to them. I was like, look, my children fell in love with the home. It's kind of crazy that we're backing out. Added another, just about another 5,000. All of a sudden, we was good, right? Then all of a sudden, we closing. I ain't gonna lie to you. I got. I ain't know you back then, brother. But we closing. We in the lawyer's office and all that, and the families is there with me. My wife and I are there, and then there's this young lady who works in a lawyer's office, and she's making copies for everybody. And then all of a sudden, they're like, "Hey, baby, how you doing? Did you eat today?" And I was like, "Whoa, wait a minute." So the person that worked in the lawyer's office was the niece of the family. I was like, "Oh, this is some real." Yeah. So please, yes, watch all that. Watch everything possible, because people will work together and try to get a little extra cheese on top. So, man, we keep one in the end run, but thank you for saying that. Please, everybody, be careful.
All right. Anybody else before I go next
No,
slide?
I want to say that was interesting because, like, working in the Board of Ed, it was a lot of nepotism going on. So easily that could happen if you trying to purchase a house. Let's say the real estate guy that you're dealing with, the lawyer might be his cousin. So a lot of nepotism going on. So like I think Brother Doug was saying, it's best to just get separate people for anything you want to want to do when you're making a purchase.
Yeah. All right. So the next step would be the closing document. In the closing document, it's called a CD. It's all the the debits and credits, who gets what the seller did, what the buyer did, that kind of stuff. And then, hey, you got your own home, got your keys, you're happy, you're excited. Let's do this. Let's build a family together. You know what I mean? All right. So after that's done, then I always advise my homeowners some tips. This is the last page. Some tips. You want to keep at least minimum $5,000 available at all times. Sometimes more. I say 5 because when the plumbing plugs up, you can't call the landlord anymore. When the roof leaks, can't call the landlord anymore. When something goes wrong, you can't call the landlord anymore. That's all you. That's all you. So have at least 5,000, close to 10,000 that's just sitting there for emergencies only, because you don't want to be stressed out. Another suggestion we have: try to put your mortgage payments on auto pay. You got to pay it, just pay it automatically, get it out the way. And you want to compile a list of reputable contractors. It takes time to build up. Hey, what's up, man? To find the right contract, find a good plumber. Like finding a good contract is like finding a good spouse, guys. So it takes time to find a good plumber, to find a good electrician, a good roofer. It takes time. So it takes time to build those guys up. Here's what Phil mentioned: estate planning. I'm a life insurance. Me and Phil both licensed life insurance agents. Also get a lawyer to do the trust and the will. I'm gonna get a life insurance. Like when you buy these houses, you buy the houses together as a couple and the mortgage together. When y'all get sick, can't go to work. Now the money stops. You're gonna get evicted now. You're gonna get foreclosed on. So get life insurance on your income protection. House worth $800,000, get $800 worth of life insurance. Then do the will and the trust, like Phil said earlier. And then what you want to do, you bought this house. You bought your piece of property in this community. Familiar yourself with everybody in the community. Get caught up. Learn who's who. Block association. Go to the police department. They have monthly meetings. Don't be scared to go to the police department. Let them know who you are in the community. You're paying taxes. You're paying their salary. So go to these board meetings. Go learn who's running what. So you get people, so they can know who you are and they know who your kid's parents is. You know what I mean? Go to those meetings. Like he's like Phil. Go to the mayor. Go to all the meetings. Learn who's who. Get involved. Now and communicate. If you go through some hardships, don't. It's pride and it's hard, but there's programs out there when times get hard too for homeowners that can't pay their mortgage. You got different nonprofits out there that gives money, believe it or not. We get, and I got somewhere NHS nonprofit only that help people prevent foreclosures. And I also work with a lot of people in my office. They do what joint venture opportunities to help you sell your house or fix your house up and sell your house. So it's always, once you own a home, there's so much you got to do after you get those keys. And I think the main thing is keep that reserve. Get that reserve up to 10,000 as soon as possible. Anybody have any input, any questions on that?
I want to say something real quick. This is real fast.
No, go ahead.
When you're searching for property, I think the best, this is my best advice. If you find a place that you like, drive around at night and see how it looks at night. Because you don't want to see no hand-to-hand transactions, pharmacists in the neighborhood, you know. So I mean, ungodly hours, man. Drive around so you can, you know, get the tone of the place.
That's good. That's good.
Puma, quick question. What's your thoughts on commercial property?
A commercial property, that's, I mean, it's not retail. Let's get into the investment side. I mean, real estate is good, man. You just gotta know what's going on in the neighborhood. What kind of commercial property? What's needed in the community when you buy it? Well, what can be there? What is the zone for? You know, commercial is good. I mean, real estate is good in general, but it's based on what it's going to be used for. Like, is it going to be used for what? Is a restaurant needed? Is a barber shop needed? Is a retail store needed? Is what's needed in the community? When you buy this store, you buying it knowing somebody's going to rent it from you, or you're going to rent it yourself. You're not just buying property just to buy it. In commercial, you need more money down for commercial too. It's not, residential is more lenient with the down payment. Commercial, you need more skin in the game because you can leave that bad boy anytime you want. Business ain't going good, I'm out. I ain't paying the mortgage. But your home, they know you probably gonna pay the mortgage, your family live there. So commercial property is good if you got a business to run or an area where people are gonna rent it for you to run their business. Cool, anything else?
Thank you.
Who's that? Marcus.
Hey Puma, I don't know, I jumped on a little late, so forgive me if you've already talked about this, but just wanted to see what your opinion is on the outlook of the housing market in general. I mean, with the interest rates being so high, inventory being so low, like what do you think is going to end up happening in the near future?
Okay, hey Cam. So for me, it's unpredictable. The real estate market is unpredictable like the stock market. Nobody knows. People want to meet us, say what they want to say, but what I would say is this. It's always good to buy real estate. Don't wait to buy real estate. Buy real estate and wait. The interest can be high, low, whatever. If it's high right now, you marry the house and date the interest rate, which means what? You buy the house and when the rate goes down, you refinance. So it's been going up. It's been for the last over 2 years now. It's been going up. It has to go back down. It has to go. It's America. It has to go back down. It's not gonna keep going up. So my thought is, I'm not an expert, I'm a prognosticator, but nothing stays the same. If you can afford to buy a house right now, buy a house. You know why, Marcus? The competition is very low right now. There are no buyers out there. There's a handful of buyers out there right now. So you're not competing with anybody. If you want a house right now, you got a pre-approval, you're gonna win because that seller's dying. Like, where's Marcus? Where's Marcus? Please, Marcus. You know what I mean? I need a buyer. Oh, and a buyer, they're not arrogant anymore. They need buyers. So 2 years ago, it was 20 buyers for every house. Now it's 20 houses for every buyer. See the difference? So now it's a good time to buy because you have no competition. If the seller wants 675 and you're the only buyer, you say 665, what are you gonna say? Thank you, I'll take 665. You know what I mean? Because he ain't got nobody else say I'm getting 700. Hope that answers your question. This is my opinion.
Yeah, I agree with you. It's just hard to see what's going to happen, but that's a fair point though. Just buy and wait.
Yeah. All right. So here's some estimate expenses for. I mean, this little stuff you can't. Based on where you live at, just be ready to pay. Be ready to pay for everything. Like Paul said, that water bill is important. When I bought my house, I brushed my teeth. I wet the toothbrush, turn the water off. Brush my teeth, turn it back on. I'm saving every piece of water. Every bill counts. So we got to focus on It's a sewer bill, the water bill, the heat, the electric, everything. I got one light on in here right now. Not all lights in the house. One light is on. You know what I'm saying? When you own a house, you got to keep that in mind, you know? Key takeaways, we talked about this already. And I want, yeah, that's right, Glenn. The struggle is real. And Mel, prepare yourself, Mel. I want you to close me out with some comments, all right, Mel? Key takeaways though. Know your credit status. Know your credit status. Select your team. There are down payment assistance out there. Know what it's going to cost you. Buys closing cost between 1% to 6% the purchase price. And while you're going through this process, like I said earlier, don't buy anything until you get your keys. Okay? Be prepared for repairs. Estimate your financial burden. Is there life insurance there? If you experience financial issues, know there's help out there. Don't go in a corner and lose your house. Reach out. I know people that can help you in times of hard. So guys, anybody in your family that's going through something with their home right now, I work with people that help people get out of foreclosure. They help them stay in their home. They got nonprofit where they help people. They make them take classes and stuff though. There's stuff you got to do. You got to take classes and that kind of thing, but they'll help you stay in your house. All right. Any questions before I turn it over to Mel for closing comments? But like I said earlier, I got I got office in Brooklyn and Crown Heights, and I have office in North Carolina and Charlotte area. Any questions, guys? I'm here for you guys. Give me a call anytime. Answer any of your questions.
So, Puma, a question someone had is that in terms of the PowerPoint, is that available? Can they get access to the PowerPoint?
Yeah. I can send it to them. Yeah, ain't no secrets in there. Ain't nothing top secret in there. They can get it. Who needs it?
I think Leo had asked that question, and then also the video will be available on the YouTube channel.
I put 3 videos. I put 3 videos in the Real Dash chat. I usually show those 3 videos. This presentation, I present this in my office every month in person. I always say add 3 videos, but the videos kind of like 15 minutes, 5 minutes a piece. I don't want to waste the time. Use it on the hill. Those videos I put them in the chat, in the WhatsApp chat. There's 3 videos in there.
So Glenn had a question. Glenn, you said you wanted to share the video?
No, just the PowerPoint presentation with the guys that I mentor.
Got it. And you here? Where you located, Glenn? Oh, you DC.
Yeah, I'm in the DMV. I'm just in Arizona right now.
I got you. Okay, definitely. Yeah. You get your number in the chat and stuff and emails. I'll get it to you for sure.
Yes, sir.
I appreciate you, man. Welcome to the team.
No problem.
Anybody else?
I just want to commend you, man, for doing a great job and teaching our brothers about what we need to all have is, push to get a house and stuff like that. So I want the brothers to put themselves in a position, to go out there and make it happen. And I want to, thank Light Skin for being transparent on the mistakes also that can be made, which help, y'all avoid some of the stuff we've been through.
Yeah, thank you, man. I appreciate it. Anybody else?
Yeah,
hey,
thank you, Puma.
You're welcome. Hey, Mel.
Yes, sir.
It's your first time on the call, man. That's what we do, baby.
First time. I'm talking a lot too. It'll be my first time.
Because what happened is you got the experts teach at the topic for the night. So we need you to we share with each other, man. So any input, anything I left out, anything you want to add to the brothers,
Well, first I want to say this is dope. This is so dope. It's what 15 brothers on here right now. That already is so positive right there, because most of everybody who spoke already has some type of knowledge about real estate and housing market and stuff like that. So we're already ahead of the game. You know what I'm saying? So you already have some insight. If you're here, that means you're already interested in it. That means you've already researched this. So we're already ahead of the game. It's just, fine tuning some of the details and, partnering with people. Our people have a good way of what the young people say, like vibing, like, or feeling a vibe from certain people. So like, when you picking a realtor, attorney, or whatever it is, a mortgage consultant, you know the vibes, right away. If something don't feel funny, I'm sure we all from probably the city and, or urban. So, if something don't feel right, don't look right, then it might not be right. So, you have an opportunity to, get out or move on to somewhere else. But I think that we all need to figure out our niche or our way to jump in or be into real estate, no matter what it is. You don't have to be a salesperson, you don't have to be a broker, you don't have to be none of that, but somewhere or another, I think is dope if we find our way in and build this generational wealth. So now I know all this information we're gonna continue to pass on to other people, our friends and family, our children. So this is definitely a great start to this, and I'm glad to be a part of it.
Thank you, man. I appreciate you guys. I'm not talking a fast talk. I'm not a slick talk. I'm just a fast talker from Brooklyn. And so I'm glad you guys enjoyed it. It made sense. And I'm gonna pass it back over to my man, my college roommate, Derek Phillips.
Puma, listen, Puma, just thank you, and just the sharing of the information that you shared. It was just very powerful, informative. And it's like there are a lot of jewels that were dropped. So I just want to just thank you for just sharing all that expertise that you have. And then everybody also just chiming in. So Puma, again, thank you. And that is my college roommate right there. Like, yeah, that's my college roommate. So you did a great job. And also, people need to know as well, this is your network. So all the people that are here, this is your network. These are all your resources. So when you have something that you're going through, you have a question about something, we have nothing but experienced people here that have so much knowledge. They have a wealth of information. This is your network. So use it. Use this network. This is your network. So P, again, man, thank you, man. Great job. You did a phenomenal job.
Thank you, guys. Good to see you guys, man. Thanks a lot.
All right, there's no other questions. So P, I guess we'll just say that's it. Thank everybody for being here. This is a great presentation, man. Appreciate it. We learned a lot as well.
Thank you, guys. Thanks for your input, guys. Thank you.
Thanks, Puma.
See you brothers next week.
See you next
Have
week.
a good night. Have a good night.
Have a good night.
Make sure I got Mel's number, Derek. I need Mel's number.
You got it. I texted you the information.
I thank you.
All right.
Oh, brother George. Look, I'm glad you came. I'm glad you came, brother, because I was going to say, nah, you can't go nowhere because you pulled a fast one on us last week. You're going to drop some knowledge and then, I forgot I got to cook.
That's what I was actually doing right now, was cooking while I was on this. So, yeah, multitasking.
All right, fellas.
All right, everybody.
Everybody have a good one, man. I'll see y'all next week, man. Everybody enjoy.
Brothers.
You got it.
Next week.
Peace.